Group, joining us on the show. Pardon me. Seth, thanks so much for your time this morning. Give us a sense of how you are reading into the comments first that we've seen last evening coming in from Axios. First saying that US and Iran are closing in on a peace deal, and immediately after you had Trump's comments, who's still threatening Iran, and that narrative is still largely at play. How long do you think till we reach a resolution? And in the interim, how are you seeing crude prices play out?
Well, we have passed the 60-day deadline that the president needed to go to Congress and get a declaration of war. And so technically the war has stopped. And at least that's the message out of Washington. And so it's extremely hard to answer this question, how long is this going to take? It seems like it is quite a standoff. And the problem here is we have trained the Iranian regime that they have a lot of leverage with the Strait of Hormuz. In terms of the phasing, I'm not sure how that becomes acceptable because it doesn't resolve the supposed main issue, which is about Iran's nuclear capacity.
Do you see immediate, resolution coming in for between the US and the West Asia, or basically Iran and Israel combined there, or you see that even though there is talks which is going on, it will go on for at least 3 to 4 more weeks before you see a concrete decision coming on the ground?
That's really difficult to call because number one, Trump has now set no specific deadline. There's a lot of reporting that there is kind of an artificial deadline because he's planning to meet with President Xi of China very soon. And I'm sure he would like to avoid having to discuss this. That meeting was already delayed because of the beginning of the war. So there's a lot to negotiate, and these different types of mechanisms or efforts to create some leverage to have negotiations, and this idea of blockading ships and trying to reduce Iran's oil revenue, does not seem to be working.
But Seth, does it seem like the markets pretty much have factored in a resolution at least? And does it seem like it's the risk-on sentiment, at least overnight, which has been at play? I mean, I was just looking at US, or for that matter, even Japan right now. Sure enough, there are earnings which are also giving them fillip, but it seems like, investors are back with a vengeance.
Yeah, who would imagine with all of this kind of volatility, with war and oil and expected higher inflation, that there's still significant confidence in future earnings. And look at the gains from today, 1.5% for the S&P 500 and a little over 2% for the NASDAQ. And these affect, this affects sentiment for those people, positive sentiment for those people primarily, who are invested in indices like retirees and pension funds and so forth. At the same time, though, consumer sentiment is at an all-time low. So it is kind of confusing since although AI and hardware may be driving all this, we are still mainly the U.S. is still mainly a consumer economy. So it's rather confusing in terms of reading the tea leaves.
And Seth, also want to get a sense on how you have read the earnings on Wall Street so far. It's largely been a good quarter from the companies that we've already seen reporting their numbers from the S&P 500. It's been a good one for financials. The AI companies have done decently well. What's been your reading so far?
Well, the big financial services companies, the big banks, have done fabulous because they make money on trading volume. So really, in a sense, doesn't matter if the prices are going up or down, as long as there's a lot of buying and selling. So there's been high earnings there. And of course, AI continues to drive the market. But you could see, I guess last week, some of the older, you could say mainstream companies in the Dow did quite well. So it seems to be broad-based, but healthcare broadly is being battered. And I'm not sure what's going to happen with automobiles if we continue to have sustained high oil prices. It just turns people off.
Yeah, really strange times we live in. But Seth, great to have you today on the show. Thank you so much for your time.
Thank you.
Okay, let's take a